In India, we don't have loans without recourse.
No. See, recourse is a very different word.
Can an entity take a home loan?
Under certain conditions, you will be able to do it. Preferably, they look at an age of 25 and above, and they take it up to 65 or 70 years at the max. So I can go and ask for a 1 crore loan, but that 1 crore will have a certain obligation.
What if I'm a freelancer? Will that make a difference?
It will make a difference because your risk will be higher.
Welcome back to another episode of Prop Sutra with Balaji Rao. Prop Sutra is presented by Prop News Time. Today we're going to talk about a topic that brings about more questions than answers: home loans in India. If you're looking to buy a house and wondering how to go about raising debt, stay tuned. Welcome to the show, sir.
Thank you.
So we'll start with the basics. What's a home loan?
Well, basically, when an individual or a firm or a company wants to buy a residential unit, it can avail of finance from the banking or the NBFC sector if there is a gap in its resources and the value of the house or apartment they wish to buy. And that is the home loan. It bridges that gap, actually.
Right.
So it's a loan taken for buying a house.
Can I only take it to buy a house? Or can I buy land? Can I buy something else with it?
Well, it has to be taken for property in a way, but it's usually meant more for residential purposes. It's not a commercial loan. Mm-hmm. You can't take it for buying a shop, a home loan. Okay. So in the residential side of it, you can buy it for a flat or an apartment. You can buy it for taking land also, as long as going to build on it. So they're going to ensure and put a condition that you're going to build on that land. Yes. And not just do land trading. Yes. So anything where you can build a home, you will be able to buy it. But you won't be able to take it against agricultural land because you actually can't build a home on agricultural land.
I'd like to first understand, do I need to be an Indian resident to avail a home loan in India?
No, you don't need to be an Indian resident. You can also be an NRI or a PIO or a OCI holder. You can avail of a home loan in India as long as the property is in India. Okay. So it is only given for properties within India. So if you're buying it and you have the requisite approvals, like if you're a foreign citizen or something and you're an OCI holder, yes, you will require a certain approval process. You will be able to get the home loan.
Can an entity take a home loan? If I'm a company, I'm a proprietorship?
You can. Under certain conditions, you will be able to do it.
So I'll go through one by one. I'm a resident Indian. At what age can I apply? I mean, I have to be working, I understand that, but what is the...
See, first and foremost, you need to be an adult, mm-hmm. Okay? So, but preferably, they look at an age of 25 and above, most of the HFIs and banks, before they give you a loan. And they take it up to 65 or 70 years at the max. Okay. Because there is a tenure also. You have to repay the loan in. So you should wait till you are at least 25. You have some track record of earning, whether it's a salary or whether it's professional income or whether it's business income. And you need to be of sound mind naturally because you're entering into a contract.
Of course.
And you need to be not to be bankrupt.
Can you help me understand that better? What should my financial position be?
You see, the financial position should be what a bank or a housing financial institution does is it tries to figure out, are you in a position to service that loan which you're taking?
Yeah.
So I can go and ask for a 1 crore loan, but that 1 crore will have a certain obligation month on month for me to pay it back.
Correct.
Which is called the EMI. EMI Correct. Is nothing but the principal and the interest combined, which is paid back mm-hmm. to the lending institution.
Right.
So when they are paying it back, so now he wants to know whether you have that 1 lakh mm-hmm. to be able to pay him back. So he will want some sort of a history you have, whether you're earning a salary or whether you are taking a share of profits in a business or in a proprietor, in a partnership firm, whether you have a record of a certain income. And then we take a percentage of that income in order to see whether that 1 lakh is going to be easy for you to pay. For example, if you have a 50% sort of eligibility, they'll be expecting you to have at least a 2 lakh income every month.
What if I'm a freelancer? Today, a lot of people don't have permanent jobs. They have multiple projects that they work on at the same time. I have been steadily getting jobs, but it's not from one employer. Will that make a difference?
It will make a difference because your risk will be higher because you don't have a steady income.
Okay.
But we will again want to look at your tax returns, what you have filed.
Okay.
If you don't have tax returns, again, we'll have to see what sort of books of accounts you've maintained, how much have you been getting, and usually that will be your bank statements.
Okay.
So we'll go through your bank statements for the last 3-4 years to see how much have you been earning. It's not just you're saying that you've been earning so much. You have to be able to prove that you've been able to earn so much, and that's why you want a loan. And basically, we want to see whether you can service the loan.
Okay.
We don't want a bad debt on our books, so we want to see whether you can service that loan.
Will it help if I'm a freelancer to have a co-applicant?
We will take the co-applicant's income also then into account.
Right.
So it does help because it improves your cash flow.
Right.
So now there are two people's cash flow I am adding and merging.
I want to buy a property that's about 1 crore. If I apply for a home loan, can I get 1 crore?
No. See, there the concept is what sort of a margin does the bank require? Margin means if you're buying something of 1 crore, they want you to also put up something. The margin will range, but generally it will be 20 to 30% at least.
Okay.
Though in certain cases they can go up to 90% and tell you can put only 10%, but most of the time they would expect you to put at least 20 to 25%. That is the down payment you will be putting, and that money has to come in first before the bank starts disbursing its loan.
Okay.
So against a 1 crore loan, for example, you're asking them, they will tell you they can maximum give you say 75 lakhs.
Right.
So they will ask you to put the down payment of 25 lakhs first, which has to come from your savings or personal borrowings.
Right.
And then they will start disbursing the 75 lakhs.
Okay.
But that is the part of how much they can disburse. But suppose you're not eligible for 75 lakhs, as I explained to you earlier.
Right.
Then they might only say that you're eligible for 60 lakhs. In which case they'll wait for you to make the down payment of 40 lakhs. Suppose you're much older and you need only a 15-year loan they can give you at the max.
Yes.
Then your EMI will shoot up because you're paying back the loan in 15 years and not in 30 years.
Right.
Then the EMI might very well be 1 lakh.
Understood.
Okay.
Yeah.
But suppose it's even more, lesser. And it depends upon the interest rate and the tenure that the EMI is determined. And that EMI has to fit in with your eligibility amount.
Okay.
So if your eligibility amount is 1 lakh, then that EMI is to be at least 1 lakh or below.
Okay.
Now, if that is going to give you, 75 lakhs, well and good.
Right.
If that is going to give you 65, then they'll tell you it's only 65 lakhs.
But I have a better shot if I'm younger because I have a longer time to pay back the loan.
Yeah, you can get a 30-year loan. So the EMI will be much lower.
And say if this property was not 1 crore but 50 lakhs, would it be easier saying I'm earning the same amount of money?
Naturally.
Okay.
Because your eligibility will be far easier to capture, and it will be giving you a far better sort of a loan amount.
So I can get up to 45 lakhs then?
No.
Okay.
As I said, that is when the LTV kicks in, the loan to value. The value of your house is 50 lakhs and they're going to be comfortable, let's say, with 80%, then they will not give you a loan beyond 40 lakhs. So there are two dimensions to it. One, what you are going to be eligible for based on your age, tenure, interest rate. The second is what is the value of the property you're buying and what is the margin they want to keep. So both have to be in sync for you to really get that loan amount.
In India, we don't have loans without recourse. They're always with recourse. And can you help us understand what do they usually take as collateral?
No. See, recourse is a very different word. In India, it is recourse means basically you're taking a loan to buy something, a home, correct?
Yes.
Now, suppose you say tomorrow, look, I'm not in a position to service this loan. So you take my home back.
Yes.
Okay. Just like you can do for a car is repossessed, a house can be repossessed. And the bank says, fine, I'll take your car or your house back. Are you off the hook? Can you say people that, okay, I have paid off the loan and I couldn't pay off the loan, so I gave them the security. When all the loans in India is usually with recourse.
Right.
With recourse means they will then possess that value, the security which you have. They will liquidate the security and see if it squares off the loan. If it doesn't square off the loan, they'll still ask you to pay the balance from
Okay.
your personal assets, whatever they might be. And that is the meaning with recourse. So when somebody says there's a loan without recourse, which is very popular, say in the United States of America,
Yes.
then people walk off. I
Okay.
can just give my car back, I can give you my home back, and they say, I'm off the hook.
I can't service the loan.
I can't service anymore. This is the security. You also take a loss if you can't recover the loan.
Okay.
You know, and that's why they keep that margin,
Right.
so that even if it goes below in the distress sale, you still have that margin to get your money back.
What kind of collateral would I have to give for a home loan?
See, collateral is a very different topic.
Okay.
Basically, the primary security for any home loan is the property you're buying with that loan.
Yes.
Plain and simple. Collateral means something which is extra being given. Like that extra will happen for whatever reason if your eligibility is not there. So as you said earlier, that if you're buying a 1 crore house and you want somebody to give you 80 lakhs or 75 lakhs,
Yes.
and your eligibility stops at 60,
Right.
but you're pushing them to give you that 15, 20, you might put up collateral. You might say that, look, I have some fixed deposits. You can collateralize that and give me. I don't want to borrow, because you can also borrow against the fixed deposit or a
Yes.
bond.
Yeah.
So you will put up some collateral to help them improve your eligibility to a higher level. Okay? Or you can bring, earlier as you said, you can bring in a co-borrower to
Yes.
say use his income also in order to estimate my eligibility. So these are all the collateral, and collaterals can be of various types. Anything that is liquid, anything that is marketable, anything that is of value. But ideally, people would still prefer to look at the primary security
Right.
and your eligibility and determine based on the LTV how much they should pay you. Because if you really have collateral, you can actually do it outside also. Like you can take from the bank where you have fixed deposits, a loan against those fixed deposits.
Just a regular loan.
Correct. You can take a finance against shares.
Okay.
You know, if you have property, other properties, you can take loans against properties. So instead of collateralizing that entire thing for your housing loan, it's better to take individual loans there.
So is that a better way to go about it?
See, it's based upon your own financial situation,
Okay.
because that will also cut back into your EMIs and into your eligibility
Right.
in its own way. So it's based on it.
Now, with a co-borrower, do I need to be married? Do I need to have a legal relationship with a co-borrower?
Technically, yes, because otherwise there's no sort of a relationship if you have and you're just pooling with someone to buy a property. There can be a dispute between you two and the bank gets stuck in between. So they would prefer to be a family member somewhere with it, because it's only in unusual situation, exceptional cases will they give it to you, even if there's no relationship between two people.
So what do you recommend for couples who are not legally married but want to purchase a home together? What do you recommend they do then?
They shouldn't be purchasing a home together, because if they have not been able to give the commitment to marriage, which is usually nowadays it lasts shorter than a home loan. So how are you giving a commitment to a 30-year home loan?
To shift from an individual to an entity, if I'm, say I'm eligible to take a home loan, but when would it be more advantageous to say take the loan on the company's name?
I don't think it's advantageous to take the loan nowadays in a company's name.
Okay.
Because frankly, see, you're wondering why you're taking the loan. You're forgetting most people take loans for a home which they want to use. So that's your security. That's your roof over your head. So taking it in the company's name really doesn't solve the issue for you. I'll tell you why. Suppose, even if it's your own company, suppose you sell it tomorrow. Suppose somebody else becomes a majority shareholder. You might lose your home because somebody will pass a resolution that that house need not be used by you. So if it is a personal home, I would assume you will tend to have it in your own name. So it really doesn't have much of an advantage trying to buy a company buying a house for its employees.
What's a CIBIL score?
A CIBIL score is a score which an individual has for his credit rating, your credibility.
Right.
It's a score between 300 to 900. And for home loans, generally, anything over 700, some people say 725, is a good score. It will
Okay.
stand you in good stead and you will be able to negotiate your interest rate better. Anything which is below, say, 600 or 550, I don't think you'll be eligible for a loan also. So a CIBIL score actually tracks how you pay all your debts, including your card payments.
Okay. My
Okay?
credit card payments.
Credit card payments. So if for whatever reason you're defaulting and you don't pay those on time, the CIBIL score will keep taking that into account and it will downgrade you.
What if I don't have a credit card? What if I've never taken a loan prior to a home loan? How do they check my credit?
They can still do it because they will check your bank statements and see how you're faring.
Okay.
And you can ask for it and you will still have a good credit score.
Is there any obvious advantage of going to a bank rather than an NBFC for a home loan?
Not really, except for the fact that NBFCs, usually people think they're going to be quicker in disbursing. They can be slightly more aggressive in the LTV, whereas a bank might say, a public sector bank might say, I'll do 75, somebody might say, I'll do 80, a private sector bank, and an NBFC might be a little bit more adventurous to say 85. But these are also controlled by RBI, so
Okay.
nobody will breach those limits. And RBI, I think, has 90, and that too for the lower end of the loans. In those cases, yes, it's better to go to an NBFC. They might be a little bit more relaxed on the eligibility. They
Right.
might say, okay, we'll take 60% of your income as a EMI payout.
Yes.
So that's the reason why people go, that they're getting higher amounts or it'll be a quicker turnaround. But otherwise, there's really no difference. What is more important is to see what sort of an interest rate are you getting. And there, public sector banks and other banks usually will score over NBFCs.
You mean they'll give a lower interest rate?
Usually, you'll get a lower interest rate.
Well, I have some closing thoughts. I'd like to ask you, it's a bit daunting to take a home loan. Sometimes people feel a bit scared. When do you recommend someone should consider taking a home loan? Even if I'm earning well, freelancer or, stably employed, when do you recommend someone should take a home loan?
See, I am of the firm opinion that if you have to take any loan in life,
Yes.
it should only be a home loan.
Why do you say so?
Okay. Because that is the only loan which you will take where you're building an asset. When you take a loan, maybe an educational loan, I will maybe modify it a little because that's become very popular nowadays. But when you are an adult and you grow up and you are working, because if you take a loan for a car, for example,
Yes.
that's an asset that is depreciating. So in a home loan, it is the safest because usually property will appreciate.
Yes.
It's inflation hedged.
Yes.
Okay. So in an appreciating property, you're betting, one, that you get a roof on your head, so it satisfies an emotional need. Two, even if you're leveraging it, and let's assume our interest rate will be, say, about 8%, which is a fair rate with today's repo cut and all that.
Right.
So if it is 8%, and if I bet that this property will at least grow by 8% year
Yes.
on year
Yeah.
over a long term, then naturally I have a positive arbitrage. I'm going to make more money because I'm giving 8% on one hand and maybe the property is appreciating at 10%.
Right.
Okay. So whichever way, it's an appreciating asset. So it is for a prudent investment. Think about it. There's a young couple or there's a single person. He's staying in a rented place, for example, and he decides that it's better for him to take a home loan and buy a house. So he takes a home loan and buys a house. 5 years later, God forbid, something goes wrong and he loses the house because the bank has pulled the plug. He is not being able to service the loan.
Yes.
So what happens? The property would have appreciated a little. He has already put in his savings.
Yes.
So when they do a distress sale also, he will get his equity back,
Right.
usually. So he'll get back what he has put into the property. Plus, he will go back and stay in a rented place. So he has not really lost anything.
Yes.
So the worst that can happen in a home loan
Yes.
is really you'll come back to square one, as we call it. So it is the safest way to build an asset, because that EMI which you're paying month on month is at least you're keeping it away from the shopping malls and the holiday destinations. Otherwise, it'll end up in Mauritius or in some mega mall.
That's a wrap for this week's episode. Thank you so much for tuning in. Do share your thoughts and feedback in the comment section below. If there's something you'd like to hear about, do let us know and we'll take it up in the next session. Don't forget to like, share and subscribe and hit the bell icon for regular notifications. Until next time, thank you.